Hello, I'm Devin Sullivan with S&S Homes. With the changing financial markets and home buying options, we've invited Jeremy Schudde from People's Home Mortgage to share with us the latest information on ways to qualify and purchase a new home. Jeremy, welcome, and thank you for being here today. What are some of the recent ways people can qualify to get into a new home?
Thanks, Devin, for having me here today. I'm glad that I'm here and able to answer some questions about just some of the new changes in the market. The best thing you can do as a home buyer is know all your options. So the first one we want to go over is just conventional loan limits have changed in Washington County. St. George is located here in Washington County. The new conventional loan limit is $726,200, which means you can put 5% down on that. You can put 10, 20% down. That's the loan limit that you can max out on conventional. FHA is a little bit lower at $593,400. So keep that in mind when you're trying to decide how much you're going to need to put down to buy a house. It's a lot less than it was last year, quite a bit less. So that's the first thing you need to know is down payment options.
So Jeremy, what are some ways buyers could use our $10,000 incentive towards a loan?
There's a few ways they can use it. The most traditional way that builders have given out incentives, they're applied towards things like closing costs, like title fees, lender fees, your appraisal, costs like that. More recently, we're seeing a lot of programs come out that are enticements for the borrower to have a lower payment. 2-1 buydowns, 1-1 buydowns. These are ways to buy down your rate for a temporary time, and they can use that $10,000 that you're giving them at closing to pay for that buy down, making their payment lower by a point, 2 points in interest rate, lower than what their actual rate is for a given period of time. Now, most of our experts right now are thinking rates are going to go down over the next year. That's what most of the people in the industry are saying, that inflation is going to hit its max. We're going to see rates come down, and that'll reverse the trend that we're having right now. So that means you could have your payment subsidized by your builder, paid for, lowered, and for a short amount of time, you'll have that lower payment and hopefully be able to refinance before.
And that's all through a 2-1 buy down.
2-1 buy downs, 1-1 buy downs, 3-2-1 buy downs. There's a lot of options available, and depending on what the client needs or what they're best suited for them, they can come in and ask about those products. They can ask any lender about those products. Every lender should have those products available.
Have you noticed that that's a good solution for a lot of buyers to help get the payment down to where it's comfortable for them to move forward with the anticipation of being able to refinance within the
Oh,
next
absolutely.
years?
Yeah, that could be a way to reduce your payment by hundreds of dollars. It just depends on what loan amount you're starting at and how much the buy down is for.
Perfect.
So yeah, it's a great way to bridge the gap between that high payment and the low payment that you want, the one you've always desired for this house, and waiting for that refinance time.
Perfect. Well, I'd love to have all of you guys reach out to Jeremy if you're interested in more information on the 2-1 buy down. Jeremy, what other types of things are you seeing for lending and that can help people move forward on financing?
Yeah, another great question. So some of them are not new things. Some have been around for a while, but one you always want to think about is when you're vacating a primary residence and you don't want to actually sell that house that you're in, you can vacate a primary residence, rent that property, and immediately count those rents towards your income. A lot of people don't know that.
So is this something that's recently changed? Because I've always thought you had to show rental income for 2 years to be able to claim it as income to use towards a loan.
Yeah, I believe it changed in 2018, I think.
Oh, wow. So
we could look that up for you specifically, but I'm pretty sure it changed in 2018, and you didn't need that anymore. That was the rule before. You had to have that claimed on your taxes already. Yeah. And it was something that everybody was taught and learned, but they didn't realize there was a change to that you can immediately count those rents. So here, let me just give you some, for instance. You've been in your home for 10, 15 years. Your payment on it now is $900. We know that you could rent a home in St. George for $2,000. That's an $1,100 difference, and maybe the new house payment that you're looking at is $2,800, $2,900. Well, now you've got $1,100 you can put towards that you're making up on your rental that you're vacating, and that makes that brand new beautiful S&S home much more affordable for you monthly payment wise. Yeah. Until rates settle down.
Yeah. So Jeremy, tell me a little bit about a HELOC, a home equity line of credit. I know that's
it's a great question. Yeah,
we'll bring it up. So, what is that something people can use a home equity line of credit for to help transition into a new home, or?
Oh, absolutely. Yeah, a lot of times we're all sitting on a lot of equity in our house, and there's two big problems that people have with down payment on the purchase of a new home. One is do I need to sell my house to get that equity first, or can I sell my house like after I buy? And one way to get take advantage of that equity is to get a home equity line of credit. So that just means you're pulling out some of the equity in your house now to put down on your new home, and then whether you're selling the house or renting it, you've got access to those funds now, and you're not worrying about that through the build process.
Awesome.
Home equity line of credits are very affordable too. They're not very expensive to obtain.
They're not. Yeah, isn't you just pay for an appraisal fee and
a lot of credit unions offer them for $300. Sometimes they don't even charge you a fee if you keep it open for 6 months or a year. These are all tools that are accessible to everyone. Whether you bank with a credit union or not, you can find one that's going to help you with that.
Yeah. Seems like that would be a good option for a lot of people that have purchased a home in the past 5 years and are looking to upgrade or downsize or just change for their family's needs, but can utilize the home equity line of credit to help the transition and then turn it into a rental property and subsidize the payment. So
absolutely.
A lot of things you could do as a buyer that would get you into a new home, but also help you in the financial long run for retaining an asset and moving forward. So this is all great information.
And some people just don't want to move twice. They want to stay in their house.
Yeah, true.
And don't want to sell it and go live with their parents, live in a basement, or live in a rental, or find a rental, or figure out what they're going to do with their dog while they're in that rental.
Yeah.
So it's a great way to just pull that money out now, take advantage of that situation, and put it down on that house, so they don't even have to worry about that. But man, I've always told my friends, if you can keep that house as a rental, you're just helping build your retirement, and you're letting somebody else pay for that house, by becoming a landlord, which is nice. So
that's great information. Let me ask you another question I have. So what about non-QM products like bank statement loans? We have a lot of people in our town that are subcontractors or business owners, and I know in the past it's been hard for them to qualify a loan being a small business owner. Do you have any information to those types of buyers of how we could get them to move forward or questions they might have?
Yeah, there are so many non-QM products. Let me kind of define that for you. So normal mortgages, like conventional mortgages, or even like jumbo loans that you would normally qualify for, oftentimes for these self-employed borrowers, like you were just mentioning, they have to have a 2-year work history, and they have to have 2 years worth of income claimed on their taxes. And then we average that out, and that's part of the way that they qualify for a loan. But these non-QM products have come along, and they're like bank statement programs. They just go off of how much you're taking in a month on average over a 1 year or 2 year period on bank statements. We've even got verification of employment loans where they just verify your employment and how much you're making. Not quite like these stated loans that we used to have back in before the crash in 2008, but still niche products that work for certain clients who maybe just started a business, maybe don't have a 2-year history, maybe just had a bad year and are trying to get back on their feet and are doing really well with their new business, but they need an option to get them into a home now just so they're not renting.
Seems like that would be a good option. This is all really good information. I love hearing it.
Yeah, there's so many products out there that people, I don't know what the statistic is. I would imagine, it's a high number of loans that are just your peanut butter and jelly conventional FHA, VA, rural loans. But so many people see the benefit and use these other products to help them get into those loans and eventually get their homes paid off. So
great. This is good information. What about some benefits of seller concessions over reduced price? Concessions can go further in reducing payment via rate buy down than reduced loan amount will. Can you elaborate on that? Meaning?
Yeah. So sometimes people will see a builder like you. Great builders are offering these incentives right now. You guys are offering a $10,000 incentive currently. Some people would say, I don't want the incentive. Just give me $10,000 off on the house, and that's fine. That
seems to work really good for a cash buyer. But what about
for even for some lending people, they're like, no, I got plenty of money down. I don't need it. I'd rather just have the house cheaper, and that's fine. That's your choice. That's what's great about when you're in the driver's seat. Yeah, the incentive you can take it or not take it. You can even take more of an incentive by raising the purchase price if you want to buy your rate down, for instance. So that $10,000 incentive can be used for so many things. It can be put towards your closing costs, your title fees, your lender fees. It can be put towards that home warranty that you want to get above and beyond what the builder's already giving.
Yep.
It can be used for rate buy downs, which is a huge one right now. So many people are doing rate buy downs. There's 1-1 buy downs. There's 2-1 buy downs, 3-2-1 buy downs. Yep. So many buy downs. And most people go, what is that, Jeremy?
Yeah, I've been seeing a lot of buy downs on this stuff. The homes we have been selling to buyers, buy down seems to be becoming more and more of a thing that everyone is interested in and is comfortable doing and wants to move forward with a buy down.
Yeah, it's a way to take, we're seeing some high rates, obviously right now, higher than we have over the last 10 years. So it's a way to take that rate and lower it for a certain time. And you can lower it by 1 point, by 2 points by paying for these buy downs. And builders like you who are offering that to their clients, it's a blessing. I mean, it's really a nice way to help them get into their home at a much lower cost.
Yeah.
So,
yeah.
Okay, so a lot of people are worried about interest rates right now. They're historically high from what we've seen over the last 10, even 20 years. But the fact of the matter is, what rates are right now, if they do go up, you're going to be glad that you bought.
Absolutely.
And when they do go down, you're going to refinance.
Correct.
So it's just deciding how long will I have this payment? How long will I be in this loan? And if that decision can be made, if you can kind of look at that decision and see how much it's going to cost you over a year period, it might make sense to buy now. So
it would make sense. It seems like a lot of people are kind of stuck in the uncertainty of wanting to see what the pricing is going to do, but essentially now is as good a time as any because it could go up, and if it goes down, you'll be able to refinance, and it's in my mind, it's a win-win to purchase now.
Yeah, totally. And it also depends on how long you're going to own the home. I mean, if you're going to own a home for 10, 15 years, even if we saw a downturn in 3 months, 6 months, a year, if that house value went down, where's it going to be in 15 years? I mean, it's your retirement home. It's going to be worth more in 15 years than it is in 6 months or.
How long do you typically see buyers living in a home? I've always heard through the grapevine and rumor, whatever you want to call it, that most people only live in a home for about 4 to 7 years, and then they switch homes because their family dynamic changed. They either don't have children and start having children, or the children leave the home and it's time to restructure the house. What do you see with a lot of your clients? How long are they typically staying in homes?
Yeah, I can only speak to the home lending side. We know that on average, home loans are only kept for about 7 years. So most people make a change, whether they keep the house or not after that 7 years. Maybe they're just changing the loan or the type, but we're definitely getting away from the situation like that our grandparents had and their grandparents. If you buy one house, you live in it your whole life. It's just that's just not the norm. A lot of people we see are downsizing for retirement, are upsizing for retirement, are buying the big home first as their first home. They just want to one and done it, and then some are buying smaller homes first and then moving up. So I think you see it all out there.
It kind of depends on what people are after, what they're looking for, and what their family needs are. So the reason I asked that question, Jeremy, is at S&S Homes, we have homes that fit every spectrum of the market. We feel like we have the larger homes, the smaller homes, the homes up in Fish Rocks that fit more of the retirement need, homes down in Riverbend that is more of a starter home area for families and younger people, and then Arbors is the larger homes. So check us out. We have a lot of stuff that would fit your needs. We have 8 different communities to choose from. We have 75 homes under construction, 25 homes that are move-in ready. So please get with us. We'd love to talk to you and show you what we have, and Jeremy can help answer any type of lending questions you may have. Well, Jeremy, I really appreciate you coming in today and sharing this information with us. I think this will be really helpful.
Yeah, it was my pleasure. Thanks for having me over, Devin. We definitely want to make sure that your clients, our friends, are all armed with as much information as they can. There's a lot of people who are sitting there thinking they don't qualify for a home loan or they don't qualify to buy one of your homes, and they do. Well, they do with options that are available. If they start now, the process is really quick for getting pre-approved. You just need to get them in and have them talk with us. So.
Perfect. Hit that. If you guys would like to get some more information from Jeremy, please click the link below for People's Home Mortgage, or for more information on S&S Homes, you can visit sshomes.info. Thank you for choosing S&S Homes.